As I mentioned, just of course headlines that have come through that banks are going to find it difficult or challenging to meet with the new Basel III requirements. Give us an indication of some of your findings, given the fact that we keep hearing that banks are well capitalized, that we will be able to meet the regulations quite effectively. It seems that we are starting to find ourselves in a different scenario where we're hearing very different views coming out.
No, that is incorrect. Our banks are well capitalized. There are three important ratios in terms of Basel III. The first ratio has to do with the capital adequacy ratio, and based on that ratio, the South African banks will be able to meet the Basel III standard. So the banks are well capitalized. We do not have a problem with respect to capital. The second ratio is what is called the leverage ratio. Many of the banks overseas have got are highly leveraged. And South African banks, by contrast, to give you an indication that in the UK you have got banks with a leverage ratio in excess of 50. And in South Africa, our bank's leverage ratio is around 20. Remember, the lower the leverage ratio, the better it is for a bank. So South African banks do not have a problem with respect to leverage. The ratio where we are seeing problems from, which is still under negotiations anyway, has to do with the liquidity ratio. In particular, there are two ratios. One is the liquidity coverage ratio, and the second is the net stable funding ratio. With the liquidity ratio, we think that South African banks will be able to meet that. They might have to do a number of things to meet that. But the net stable funding ratio, which insists that banks need to have particular funding for up to a period of a year, would mean that banks would end up having to raise capital, and raise capital not to go and on lend it, but basically raise capital that they would keep for themselves just in order to meet that liquidity ratio. And South Africa, when we looked at these ratios, we think that they would have an adverse impact on real economic activity, and it is a subject that we are constantly raising in our interactions in Basel.
Mr. Kganyago, when you mentioned those two ratios which you're concerned of, the liquidity coverage ratio, that's going to be introduced by 2015. As it stands right now, what do the banks need to do to start preparing themselves for this deadline?
Well, the decisions of what the banks must do is a decision that must be taken by banks management and their board. And by the way, the date of 2015 that you have is incorrect. In 2013, what would happen is that there would be an indication of exactly what we had actually agreed on with respect to those ratios as we are having these deliberations. And it is actually expected that Basel III will actually be rolled in from 2019. There might be countries that decide to do it earlier. Whether it is desirable for the countries to do it earlier, that is a question that falls into the area that was called national discretion in terms of Basel III. And in as far as this thing of national discretion is concerned, so far South Africa is concerned, we believe that we would like to utilize national discretion to the fullest that we possibly can in order to make sure that it gives our banks an opportunity to adjust in such a manner that it doesn't have an adverse impact on real economic activity.
Deputy Governor, again, just to reiterate, the net stable funding ratio, the other one that you've actually pointed out where we could see a little bit of challenge. As it stands right now with regards to the banks, you're talking about it not having an adverse economic impact on the country. Do you think that all these Basel III requirements are actually warranted when you look into a country such as South Africa? Because thus far we've actually proved ourselves, even during the 2008 crisis, that we regulate our banking environments very well. Do you think that it is necessary right now?
Well, the point here is that the deliberations amongst the regulators is not those of so much of more regulation as opposed to more effective regulation. Now, if you look at the funding structures of South African banks, they are very similar to the funding structures of the banks, for example, in Australia. Our banks rely on corporate deposits rather than on retail deposits. Retail deposits are perceived to be more stable than corporate deposits. And what we had been arguing is that, well, in South Africa, when you ask South Africans how they save, they tend to save through contractual savings and through unit trust, those kinds of things. And that the issue here is not so much that we shouldn't have Basel III, we should have Basel III. It's the manner in which some of these ratios have been defined, and we are engaging in those deliberations. Should South Africa comply with international standards? Yes, we should comply with international standards. We are a member of the Basel Committee on Banking Supervision, and we will make our point, and we'll argue our point in all of those meetings. The fact that our banks have weathered the storm is exactly what earned us a seat at the BCBS, the Basel Committee on Banking Supervision, because we do have something to offer to the rest of the world. That said, South Africans should not be complacent because you do not know what we would be hit from the global turmoil. That said, as we say in the financial stability review, our banks have weathered the storm well, and the stats that we have made show that our banks could actually weather the global financial crisis even now.